Welcome back, everybody. We are diving into some really interesting market movements this week. I think we've got a head scratcher here. We're seeing record highs in the market fueled by all this optimism about the new president's policies. Everyone keeps saying pro-business this and pro-business that. But then at the same time, we're looking at American Express, a company that just blew past earnings expectations. They increased their dividend. They're reporting record card member spending, and their stock still dropped 3% on Friday. So what's going on here? Help me understand this.
Yeah, it's definitely a little bit of a puzzle.
Yeah.
I think a big thing to remember is that right now, a lot of what we're seeing is driven by, well, sentiment and expectation rather than actual policy changes. You hear that phrase pro-business
Yeah.
all the time right now. But it seems like people are interpreting it pretty broadly, and we haven't really seen much concrete action yet.
So you're saying it's like the market's getting ahead of itself, celebrating potential gains before they've actually,
Yeah.
materialized.
Yeah, exactly.
But it's not universal, right? We're seeing this weird contrast. Like the broader market, the S&P 500, the NASDAQ, the Dow, they all hit record highs this week. The S&P and NASDAQ are up around 1.7%, and the Dow climbed 2.2%. So December's pullback is like a distant memory. But then you've got American Express just bucking the trend.
Right, and even with the record highs, even the major indexes closed a little bit lower on Friday. Seems like investors just took some profits after that huge run. So the S&P 500 dipped just 0.3%, the NASDAQ was down 0.5%, and the Dow lost 0.3%. And I think those little dips show us how sensitive the market is right now. It reacts to every statement, every little change. And like with American Express, even their positive news wasn't enough to overcome that kind of nervous energy.
All right, it's almost like good news can't even break through in this weird climate. So let's get specific. Let's dig into American Express. They posted record revenues, record net income. Earnings per share were through the roof. They added 13 million new cardholders. I mean, the numbers are amazing. Revenues were $65.9 billion, a 10% increase year over year. Net income hit $10.1 billion. And earnings per share, get this, $14.01. That's a 25% jump from last year. So their stock still fell 3% on Friday. What explains that?
I think one of the quotes you pulled from Kyle Sanders, an analyst at Edward Jones, might explain it. He said that while American Express's revenue growth guidance for 2025, which is projected between 8 to 10%, so that's healthy, but it falls just a bit short of their long-term target of over 10% growth. So maybe that's why some investors weren't as excited as they could have been. Maybe they were expecting, I don't know, even more aggressive projections.
So it's like, even though they're doing so well, the market's fixated on what's potentially missing. That tiny gap between projected growth and their long-term target. That seems kind of short-sighted, doesn't it?
Yeah, I think it shows the disconnect between that market sentiment we're seeing, focus on immediate wins and these huge projections, and the reality of a company that's actually performing really well, just maybe not exceeding already really high expectations.
Right, right. And speaking of expectations, one of your articles quotes Mark Malik, the CIO at Siebert. He said, and I quote, "So far, markets have reacted to every statement made by the president, even those that should not have any impact." I mean, that speaks volumes about the volatility we're seeing, doesn't it?
Yeah, it does. And it just, I don't know, it emphasizes that right now, speculation and interpretation are kind of driving the market more than any real outcomes.
Yeah.
So that leaves the market open to these wild swings because, even a tiny statement can trigger these huge shifts.
So how do you make sense of all of this? When you look at American Express's performance specifically.
Well, it's a little like reading tea leaves, right?
Yeah.
There's so many factors in play. But one thing we can do is try to look past those immediate changes and look at the company's long-term strategy. One thing that's interesting to me is how much American Express is focused on. Well, on getting younger demographics on board, like millennials and Gen Z. They're changing what they offer to appeal to those groups. And I think that could be huge in a market that's changing so quickly.
That's really interesting because one of the articles actually quotes American Express's CFO, Christophe Lecaillec. He talks about evolving their value proposition to appeal to those younger customers. They're adding benefits for things like streaming services and restaurants, things that actually matter to those demographics.
Exactly. It shows they're not just
sitting
back and watching things happen. They know the market's changing and they're actively trying to shape their future. But whether that'll be enough to satisfy those investors who seem laser focused on those projected growth targets, well, we'll have to see.
It's the million-dollar question, right? We've got this company performing amazingly well, but facing this market that seems obsessed with, speculation and instant results. So where do we go from here? Let's dig a little deeper in part two of our deep dive. It's like, how do you even evaluate a company when so much is riding on things outside their control? It's like judging a swimmer's speed when the current in the pool keeps changing. You know what I mean?
Yeah, that's a great way to put it. It's tough to tell how much of that stock dip is,
Yeah.
genuine concern about Amex
Right.
versus like the market just reacting to everything the new president says and does.
It makes you think, are we putting too much emphasis on those, like daily stock fluctuations? If we look at the fundamentals, American Express is incredibly solid. We already talked about their record revenue and earnings, but
Yeah.
what else jumps out at you when you look at their performance?
I think their commitment to giving back to their shareholders is a big one. They just increased their dividend by 17%, which shows they're pretty confident about the future.
It's like they're saying, hey, we believe in ourselves, you should too, which kind of pushes back against that lower growth projection, doesn't it?
Right. It shows they're thinking long term, focused on steady growth and shareholder value,
Yeah.
which is easy to forget when the market is so obsessed with those, quick gains.
Okay, so fundamentals are good, shareholders are happy. What about their long-term strategy? We talked about how they're trying to reach those younger demographics, but is there more to it than just attracting millennials and Gen Z?
Well, that's definitely a big part of it, but it's part of this larger shift towards what some people are calling like lifestyle benefits. It seems like Amex knows that younger people don't really care about, those old school reward programs. They want things that fit into their lifestyle, things they actually care about.
So instead of just offering points for gas or groceries, they're giving perks for things like streaming services, concerts, travel experiences. It's like meeting those younger customers where they are.
Exactly. And it goes beyond the actual rewards. They're really leaning into technology and partnerships to give their customers a much smoother, more personalized experience.
So they're not just changing their products, they're changing their whole approach to, well, to customer engagement. That seems like a pretty smart move, especially now when everything's becoming so digital.
Yeah, for sure. I think being able to adapt is so important for any company that wants to stay relevant, especially with all these fintech companies popping up and, how much consumer expectations are changing.
So, how do you think Amex is handling all this choppy water in the market right now? Are they weathering the storm?
Well,
Yeah.
we do have to remember that there's always going to be some risk, things we can't predict. The way the market's responding to the new president's policies is still kind of a mystery. And there's always a chance of those, unexpected events in the economy or global politics.
It's like they're sailing in uncharted territory. Even with the best ship and crew, you never know what the weather's going to do.
Exactly. And in this case, the weather is things like inflation, interest rates, consumer confidence, what's happening with global trade, you know.
Lots of moving parts. So, how can a company like Amex prepare for all that? How do they manage that risk?
I think the key is to stay flexible, use data to their advantage, and focus on what they're good at. They need to keep analyzing how their customers behave, anticipate changes in the market, and be ready to adapt.
So, it's about constant evolution, always adjusting, and not being afraid to change things up.
Right. And while no one can predict the future perfectly, I think American Express's track record, their strategy, their willingness to adapt, it all shows that they're in a good spot to deal with whatever comes their way.
That's good to hear. But it's also important to remember that, context is everything.
Yeah.
The market is in a weird place right now. There are good things happening and bad things happening at the same time. It's like walking on a tightrope where everything around you is constantly moving.
Yeah. It's a balancing act. I mean, all that excitement about the new president and his pro-business attitude, it's definitely helped the market in some ways. But we also have to admit that a lot of it is based on, well, on what we think will happen, not what's actually happening yet.
Right, and that's where things get kind of tricky. Those expectations can backfire. If they're too high, even good news can be seen as, I don't know, as a disappointment, like we saw with Amex.
Exactly. Which is why it's so important to figure out for yourself how a company is doing and what its potential is. You got to take all the information, ignore the noise, and come to your own conclusions.
Right, it's about looking beyond the headlines, not getting caught up in the hype or the doom and gloom either. We can give you the information and analysis, but ultimately, it's up to you to make those smart decisions.
Exactly. And that's kind of the point, to give you a better understanding of what's going on so you can make those decisions confidently.
So where does American Express fit into all of this? I mean, they're obviously a huge player with a long history of success.
Yeah, and they have a really strong brand.
Yeah.
And like we said, they're not afraid to change. They're constantly looking for new ways to connect with their customers and stay ahead of the game.
And they're focused on, Financial strength, customer loyalty, coming up with new strategies. It seems like they're ready for whatever's coming next.
All of that points to a company that's prepared to deal with the challenges and grab those opportunities that are out there.
But like we said, there are always those things you can't control.
Right. It's like trying to solve a puzzle when some of the pieces keep changing shape.
Okay, so we've talked about a lot. Market trends, investor sentiment, how American Express is doing, their plans for the future. It's a lot. But before we move on, I want to go back to that quote from Mark Mellick, the CIO at Siebert. He said, "So far, markets have reacted to every statement made by the president, even those that should not have any impact." It's almost like the market is, I don't know.
Hanging on his every word.
Yeah.
Trying to figure out what it all means.
Yeah, and that creates this super volatile environment where anything he says can cause huge shifts. So how do we understand that sensitivity? Is it just irrational excitement, or is there something more to it?
It's probably a bit of both, to be honest. I mean, there's a lot of optimism about his pro-business stance, but there's also a lot of uncertainty about how his policies will actually work out in practice.
So it's a mix of hope and worry. The market's trying to see the future, but it's still pretty blurry.
Exactly. Which is why it's important to be careful. Don't let the hype sweep you away. You shouldn't be making investment decisions based on emotions or guesses.
Right. It's about doing your homework, understanding the situation, and making choices that fit your own goals and circumstances.
That's the key.
So what do you think? Is this market sensitivity just a temporary thing, or are we entering this new era of volatility and unpredictability?
Well, it's too early to say for sure.
Yeah, it's like we're in uncharted territory. So if we are entering this new era of volatility, how should we be navigating it? What do we need to be watching for to make sense of this new market landscape?
I think staying informed is, well, more important than ever. You really got to keep an eye on those.
Right.
Economic trends, both here and globally. Things like interest rates, inflation, consumer confidence, even what's happening in geopolitics, all those things can affect the market.
You mentioned before that one of your articles talked about the uncertainty around the new president's tax plan and how that could impact consumer spending. That's a great example of something that doesn't seem directly related to American Express, but could actually have a huge impact on their business.
Oh, absolutely. I mean, consumer spending is so important for American Express, and then you throw in the uncertainty around global trade, and, well, it just shows how complex and interconnected everything is.
It's like a giant chess game, you know? The market's the board, and all these global economic forces are the players.
That's a perfect analogy. And just like in chess, every move has consequences, and you never know for sure what the outcome will be.
So how do we play this game strategically as investors? I mean, what moves can we make to position ourselves well?
Diversification is key, making sure your portfolio isn't too dependent on any one sector or asset class. That can help manage the risk when the market's all over the place.
Right, spreading the risk.
Exactly. And it's always a good idea to talk to a financial advisor. They can help you come up with a plan that's tailored to your goals and your comfort level with risk.
Okay, so we need to stay informed, diversify, and maybe get some professional advice.
Got it. Now, bringing it back to American Express. With everything we've talked about, would you say they're a company worth keeping on our radar?
Definitely. Like we said, they're going through some changes right now, but they also have a really strong foundation, a history of success, and a clear vision for what they want to do in the future. It doesn't seem like they're scared of the challenges. In fact, they seem to be embracing them, adapting to how consumers are changing and using new technology.
Right, exactly. And that focus on keeping their customers happy, staying financially strong, and always innovating, it shows they're ready to handle both the good and the bad that comes with this new market reality.
So is this a good time to buy their stock? Should we be cautious? What's the takeaway here?
That's the big question, isn't it? And unfortunately, there's no easy answer. It really depends on your individual situation, your investment goals, how much risk you're comfortable with, how long you're planning to invest.
I guess what we can say is American Express is definitely a company to watch. They're a great example of these larger market trends we're seeing. That mix of optimism and uncertainty, the need for companies to be flexible and adapt, and that constant drive to create value in a world that's changing so fast.
That's a great way to sum it up. And that's what makes these deep dives so interesting. It's not just about numbers on a page. It's about understanding those bigger forces that are shaping the world.
Yeah.
And how they affect companies, investments, which ultimately affect all of us.
It's about connecting the dots, seeing the bigger picture, and that's what we try to do here, give you the information and perspective you need to navigate this crazy world.
Absolutely. So as we wrap things up, I'd encourage you to keep exploring, keep learning, keep asking those tough questions. That's how we become more informed and empowered, not just as investors, but as people who are part of this dynamic global economy.
Couldn't agree more. Thanks for joining us for this deep dive into the world of American Express and this ever-changing market. Until next time, stay curious and keep those portfolios growing.